Welcome back. I'm Zanati Kuma and you're watching Trade of the Week. And today we unpack Pick and Pay, Spar and FirstRand with founder of Herenia Capital, Pietri Riedelinges. Thank you so much for your time, Pietri. There is so much commentary on the fundamentals of Pick and Pay. And I think it's polarizing because you have half of the investment fraternity saying that the stock is just too cheap to pass by, and because it's so cheap, meaning that there can be lots of upside when the business finally gets its issues sorted. And then the other one says, actually, no, you'd rather spend your money somewhere else. What are you looking at?
Look, I think what we're looking at really is a technical situation on Pick and Pay. I think that you're quite right. There's quite a lot to be said about a very competitive retail environment, particularly in a very difficult market condition. But generally, you know, a rising tide lifts all ships, and we've seen that some of the other retailers have performed relatively well, and I think that a large number of these retailers are starting to at least bottom out or turn the corner, right? So what we're looking at today is really a very speculative trade on Pick and Pay rather than a lifelong investment. I think what happens often is I can tend to be quite greedy with some of these trades where we try to kind of bottom pick a trade or pick a turning point, or as is the case in Pick and Pay at the moment, where essentially I would look for a trade from a nice little rounding bottom like this for, you know, the swing high or whatever the case. So we're going to be a bit more conservative than that, and look at a couple of things. One, our solid black line at the bottom here is kind of indicative of a, let me keep that open, is indicative of what was our first sort of robust entry where, you know, we can say, okay, we could be forming a little running bottom. Then we've got a little dashed line over here, which broke again and gave another entry for us on Friday, essentially. So we're a bit late to the party if you're taking the trade today, but you could essentially sort of stop out around 26 or just below 26 to give it some breathing room, and your target price would be this 200-day moving average at 30. So you're looking at, well, around 30 Rand 50 cents. So you're looking at potentially 3 Rand upside with around a Rand 50 downside. So 1 to 2 risk reward ratio. It's a fair trade if you're a CFD trader. It's not a lifelong investment. Where I would generally tend to be quite greedy is I'd generally look for, like, you know, the swing high, which is around, you could use this level, maybe 37, right? So a good trade or a good sort of course of action here could potentially be to, once you get to the 30 Rand 50 cent level, or 30 Rand level as your target price, switch over to a 2-day trailing stop or a 2-day low trailing stop, and give the trade some time to work out in the situation, in the event that we have a longer term trend change scenario here. But in the meantime, we're just essentially trading a mean reversion back to the 200-day moving average. It hasn't touched this 200-day moving average in a mighty long time. And if you look at the historic sort of relationship that it has with it, it generally tends to pay quite a bit of respect to it. So I think it's a matter of time before we sort of test that 200-day moving average, potentially see a trend change. I don't think that, given the context of, yes, things are tough, but are they really that tough that from 2016 until now, it's been 8 years, right, of downtrend for Pick and Pay. I think maybe there's a little bit of value in these retailers now.
Okay. So what you're saying is that even though maybe you've gone in after the share price reached a bottom, that it's still very cheap to get in at this point, and then there's still more upside expected, at least maybe in the short term?
Yeah, at least, I mean, we're taking a short-term sort of leverage trade here, right? So we've got a decent risk-reward ratio of 1 to 2. So for 1 Rand 50 risk, we can get 3 Rand or more return. So, you know, keep that as it is. Don't be too greedy. If it breaches above this 30 Rand or this 200-day moving average, it might give us another opportunity to get in for a longer-term trade. But for now, this is a nice little short-term bounce trade, if you will. Maybe a little bit late to the party, so the lowest conviction trade idea of the day.
Yeah. Would you say that also, I mean, this is just based on the fact that the business is bound to turn around at this point, or the fact that it's just been in a downward trend for so long that it just can't stay there for much longer?
I think, I mean, you can't really say that, right? I mean, how long is a piece of string? You know, it can keep going. You know, how much wind is blowing? It can keep going forever, right?
And we've seen many falling knives.
So yeah, I mean, I don't know whether or not it's a logical sort of argument to say that it just doesn't make sense to be down here and it can't go any lower. I mean, it very well could. I just think from a momentum perspective, what's happening is there's a bit of a bounce in the market, and I think maybe we've seen a little bit of we've really low volumes on the market, really extremely low volumes on the market. So a little bit of breath of good news is really going to boost our entire market, to be fair. And I think that this stock is potentially at a point where the valuation is now so low that it makes sense to buy, right? It doesn't necessarily mean it's not going to go to 10 Rand. I certainly hope it doesn't. But I do think that it is a good buying opportunity if you are, both a short-term trader or even if you're a longer-term investor, you can take a small portion and put it in your long-term portfolio. Pick n Pay is not going bust. It's been tough, but it's not going to go bankrupt overnight, right?
Of course. And actually, that's what I want to ask. I mean, you talk about how a high tide lifts all boats, and we know that at some point the macroeconomic environment is going to ease, interest rates are going to start coming down, inflation also, and consumers are going to start having a little bit more disposable income. But because of the strategy and also the balance sheet that we are seeing there on a Pick n Pay, do you think that even with the easing macro environment, it can have good upside considering the internal problems that the company?
Even so, I think so. Yes. I mean, if we have an easing of inflation and we start seeing some economic growth come through, just the pure amount of people that are moving into the middle class, you've got a massively expanding customer base, right? So that even if you have a few internal struggles, you're still going to make more money. Particularly if you're a company that has such a huge footprint throughout the course of the entire country, right? So I think that in the event that things start to go better, and look, I think stand by what I said, have been saying for a few times now, where we potentially see the shift where we see, the North American markets and the European markets start to contract, while the sort of Asian markets and us being part of BRICS start to expand, and we do well while they struggle for a little bit. I think that shift is slowly happening. I mean, these things take very, very long. And when that eventually starts to gain a bit of momentum, I think we're in a very good position, and someone like Pick n Pay absolutely will benefit from that. Although, let's be clear, this is a short-term trade. Okay, right? We're not making lifelong investments. We're buying Pick n Pay at 27 Rand 50 if you can, looking to sell it at 30 Rand and 50 cents with a stop loss just below 26. Okay.
Well, I hope that for the longer-term investors that Sean Summers can do the things and that business can start making a turnaround there. Let's go to another food retailer, Spar. What are you seeing there on the technical side? Because this is also another retailer that has been hammered by a number of issues.
Okay, so I think we'll start with just kind of zooming out a little bit and looking at the longer-term picture here. We also have a very long-term downward trend. So probabilistically, the trend continues lower. What we have here is a very sort of tight range. Well, it's not that tight, I guess. It's about 12 Rand in the range here. So that's quite a big move, where we see essentially the share price moving from this 108 level all the way to 120, back to 108, 120, 108, and so on. Has been doing this essentially since late September, call it October last year to now. So what we have at the moment, Spar is sitting firmly on the bottom of this channel line again. So one of two things happens here. One, which is my bias at this stage, we see the bounce back to the top of the range. Right? So you buy some stock here, you put your stop loss essentially just below, let's say 107.50. You can maybe even give it some breathing room, say below 107. And your target price is the top of the range, just below, say it's 120.61, so let's go to 119.85, right? So, tip, never use round numbers, because bigger players know about those numbers, and they tend to get very close but not quite trigger them. So go just below 120, and that can give you a very, very good risk-reward ratio. In fact, we can measure that. So let's say we get in right now while we're chatting here, and we put our stop loss at 107, 107.01, and we put our target price at the top there, and we've got a risk-reward ratio of essentially 4.3 to 1, which is massive.
Yeah.
Right? So for every rand you risk, you can make 4 rand. So these are the kinds of trades that we want to take. So, like I say, one of two things happens here. You enter the trade at this level, you target price at 119.50, 119.85. You make your 4 reward for your 1 risk. Alternatively, you are of the view that the downward trend is going to continue. So this is where you use your own discretion. You wait for a breakout below this. Essentially, this daily price must close below the level, below 108 rand. So our little candle here will then turn into a nice solid candle with a close below sort of 108. That would be a short trigger, and then you could essentially measure this move here, which is again 12 rand, project that lower as your target price. So you're looking sort of in the high 90s as your potential target price, and you can stop loss then which would be in the middle of this range at 115, 114, call it 115, with a target price of like 95 or 94 or something like that. So that would give you a nice little high probability. Again, maybe not such a great risk reward, the 1 to 2 risk reward here in this case, but still a relatively high probability trade. My personal bias and the view at our firm at this stage is that we probably see the bounce off this level, and we prefer the long trade, but we have to stay open to both. So for now, our play would be to buy the stock, trade it for the bounce. If we see the break below and a close below the 108 level, we'd swing that trade to the short side.
Ah, all right. Would you also call it another turnaround story?
Again, I think it's more not necessarily as important that the individual company is going to somehow magically do much better. I just think that the overall market has been absolutely hammered, and a lot of these stocks are trading at levels that they really don't deserve to be at.
All right. Let's go into banking. FirstRand, the most valuable bank on the JSE. I would imagine that this one has actually been on the opposite side of the spectrum, comparing that to Spar and Pick n Pay. What is that picture looking like right now?
Okay, let's start with the long-term picture. So we had our little COVID crash, right? Which is obviously nobody had a good time during that period. So let's say since COVID, we've been essentially in a bit of an uptrend and then going sideways, right? So what we're doing here is we can identify a few things. We've got a massive range here from say 60 to 74. So in percentage terms, that is relatively big, right? What we think at this stage, though, is basically just a little trend following trade here. So we can say that over the last, let's say, 1 year's worth of data, the trend is up, well, essentially sideways to slightly higher. And we think what we're seeing here is basically a little bottoming situation. Even if we look at the way the stochastic looks, a stochastic oscillator tends to sit at the bottom for a very long time and then kind of poke its head above. We've been down for a very long time, looking like we're gearing up for that next move higher, and we may be sort of trading this wave all the way back to this recent high. We've made a higher low this time. That's a higher low as well, so 3 consecutive higher lows. We might be sitting in a situation where we have a breakout trend higher. We've seen some of the other banks perform really well already, and FirstRand has been a bit of a laggard. So our thinking at this stage is that if we get a close above this black mark indicated here, or this black line indicated here, which is 64.61 or 64.60, if you can get a daily close above that, that would trigger a long trade for you. Your conservative target would be the 200-day moving average at 67 rand, right? So that gives you a relatively decent move with your stop loss below the 63 rand 25 level. Once you reach this the 200-day moving average, see, again, I'd be greedy and say, I'll go for the swing high, right? That's where I want to take my profit. Doesn't necessarily always get there. That happens very regularly. So once you get to the 200-day moving average, switch to a 2-day low trailing stop loss, and then give the trade some time to run. It could run all the way to 72 or 74, potentially higher, but if you give it some time and the ability to run in your favor, maybe even at the 200-day moving average, take off half the position, leave the other half on a 2-day low trailing stop. Sure, I've said that so many times. It's almost like a tongue twister. Then I think you've got a fairly good trade here.
Yeah. You talk about the other banks, and I'm wondering if, you know, how much upside FirstRand could have compared to the other banks that it seems have been considered undervalued.
Well, you see, this is the story of South Africa at the moment. I mean, we have a very emotional populace. When things are good, things are better than anywhere else, right? And when things are bad, things are worse than anywhere else.
Yeah.
And the truth is, things are actually pretty even in the long run, right? The problem that we have, and this is something that I'm sure you're tired of hearing me complain about now for the last few years, lowering trading volumes almost daily on the JSE is just grinding lower and lower and lower. So eventually, the economic tide turns. It happens every time, right? I mean, we can't be so pessimistic that we think, well, I know that we as a populace probably can be so pessimistic that we think the world is going to end, but it's not going to end. It hasn't yet, and it probabilistically won't. So, yes, I think that times are generally tough. At the moment, the US is probably going to start cutting interest rates. We're all going to whoop and cheer. That's not going to be so great for the banks. But in general, I think that, you know, that is going to be the start of this, well, at least an acceleration of this shift from west to east. And I think we're well positioned for that. And I think that, yes, a lot of our companies are deeply undervalued because people look at us from the outside. And, you know, we do some really silly things. We've got massive corruption problems, and our ports don't work, and our roads don't work, and all these things. And if we can actually just get some of those things fixed, which over time I'm sure we will, I think we are going to do very well.
And our banks work. And
our banks work extremely well.
All right.
So does our tax man.
Oh, exactly. Very, very hard. On the educational segment, you've been mentioning quite a lot the 2-day low trailing stop.
Okay, so let's just use this FirstRand chart as an example, right? So we'll just rewind the clock and say that we're at this situation where we have a similar setup to what we had last time, right? So we got our little trade, or our little range, it breaks the range, we managed to get in. So what we want to do is we say we use a 2-day low trailing stop loss. So there's different ways of doing trailing stop losses. This is just one of many. There's a way more complicated one, which I don't think we have enough time to cover now. So the 2-day low is essentially the one that we use, right? So let's say that we bought this stock when it broke the 200-day moving average over here, and we want to trade it higher. Right, so we then essentially say this is the day that we bought it on, which is the 15th. 2 days ago was the 13th. The low of this day is our stop loss. And the next day comes along. 2 days ago, the low is our stop loss. The next day, 2 days ago, the low is our stop loss. And so we go every time that the stock sort of, you know, the next day elapses, we look at what the price was. The lowest point of the price was 2 days ago, and we use that as our stop loss. So in that case there, it would have taken you out.
Interesting.
If you'd bought this breakout here, you'd get out over there. Right? If you bought here, unfortunately, you made no money in that trade. Essentially, you sat in that trade for a couple of weeks and, you know, came out square. But as you can see, it actually works relatively well. Here in a situation where you've got a strong push higher, you would be essentially protected because here your 2-day low would now be there. As soon as it breaks lower, you're out, right? The opposite is true if you're taking a short position, you can use a 2-day high. So you'd be able to ride this down, day 1, day 2. When it pops up here, 2 days ago would be there. So you'd actually be out as soon as the market opens.
Well, thank you so much for that and for your insights today. Really appreciate it. That was founder of Herenia Capital, Beatrice Redelinges, with this week's Trade of the Week.